Welcome to the Tech Egg. Don't get scrambled. Enjoy the video.
In this video, I will explain how to add ledger balance in any accounting system. The fundamental and only correct way to adjust a ledger balance is by creating a journal entry. This process is crucial for maintaining accurate financial records. Think of a journal entry as the initial record of a transaction, detailing its impact on at least two accounts. This foundational step ensures that all financial movements are systematically captured before they update your main ledger. To create a journal entry, first identify the transaction date and the specific accounts involved. For instance, if you're adding $100 to a cash account, you'll debit cash. Then, you must credit another account, perhaps a revenue or equity account, for the same $100. This adherence to double-entry bookkeeping, where debits always equal credits, is absolutely essential for maintaining the integrity of your financial system. Once your journal entry is complete, the next step is posting it to the general ledger. This means transferring the debit and credit amounts from your journal to their individual ledger accounts. For example, the $100 debit to cash from our previous example would be recorded in the cash ledger account. This process systematically updates each account's running balance, providing a clear, organized view of all financial movements within your business. After posting, it is vital to verify the accuracy of your ledger balances. A key tool for this is the trial balance, which lists all ledger accounts and their current balances. The sum of all debit balances must precisely equal the sum of all credit balances. If these totals do not match, it signals an error in your entries that requires immediate investigation and correction to ensure your financial statements are completely reliable.
Thanks for watching. Consider subscribing if I helped unscramble your problems.